Hey everyone, and welcome back for another deep dive. Today we're going to be exploring the world of angel investing.
Sounds good.
We're taking a look at the 2025 book, Be the Angel Investor, Funding Startups by Kevin Johnson.
Okay.
And we're going to try to really break this down and learn what it takes to potentially get in on the ground floor of the next big thing.
It's really exciting. Such a fascinating world.
Yeah. So, first things first, maybe we should kind of define angel investing.
Sure.
The book puts it pretty simply, providing capital to early stage startups in exchange for equity.
It's like being, an early believer in something.
Right.
Like shaping the future and having this potential to reap these massive rewards. It's pretty amazing to think about this concept that originated on Broadway.
Oh, that's right.
Over a century ago, and how it's transformed and evolved with the tech boom.
The book did mention the Broadway connection. I thought that was really interesting.
It's funny, those early angels were basically saving theatrical productions, and now it's about funding startups with huge potential.
Yeah, exactly.
Which brings up a question that a lot of people have is, how is angel investing different from venture capital?
Right.
They both fund startups, right?
That's a great question. They both do fund startups, but that's where things get interesting.
Okay.
Angels invest their own money, often in smaller amounts, and they typically get involved much earlier in the game than venture capitalists do.
Okay.
They're much more hands-on. Yeah, they often act as mentors.
So it's not just about the money, it's about the expertise as well.
It's guidance and expertise and connections.
Right.
It's a whole network.
Absolutely. Okay, so let's talk about the why.
Okay.
Why become an angel investor?
Yeah.
The book highlights the potential for high returns, obviously.
Of course, yeah.
Diversification and being a part of something big.
Absolutely.
All very appealing things.
Very, very exciting things, but it's important to be realistic about it too, It's not a get-rich-quick scheme.
Right.
It takes guts, it takes strategy, it takes calculated risks, not reckless gambling.
The book really emphasizes that. It's about informed decisions, not chasing the hype.
Exactly.
But beyond the financial gains, are there other rewards as well?
Oh, absolutely.
For angel investors.
Think about mentoring passionate entrepreneurs.
Right.
Learning about these cutting-edge ideas.
Yeah.
Joining this community of innovators.
Yeah.
I mean, those are pretty powerful incentives too.
Definitely. Okay, let's tackle a common myth.
Okay.
Do you have to be ultra wealthy to be an angel investor?
That's a great question. I'm glad you asked that because the book actually debunks that right away.
Okay.
Many angels actually start small.
Okay.
And they grow their involvement as they gain experience and confidence.
So you don't need a Scrooge McDuck vault to get started.
Exactly. You don't need to be a billionaire.
That's reassuring. Yeah.
So where do angel investors fit into this whole startup ecosystem?
Right.
We've got all these different stages of funding.
It's like a relay race.
Yeah.
Angels come in at the very beginning, the seed stage, when startups are just getting off the ground.
Okay.
They provide that crucial early capital.
So they kind of kick things off, and then as the company grows, they might need more funding.
Exactly.
That's where maybe angel groups or early stage VCs step in.
Right.
And then later on, larger venture capital firms and even corporate investors help to scale the business.
Exactly. Angels play this vital role at that crucial early stage.
Yeah.
Not just financially, but by providing, guidance, connections, that sort of thing.
It's fascinating how this landscape of angel investing is constantly evolving.
It really is.
The book mentions some interesting trends like the rise of crowdfunding platforms.
Yes.
Increased syndication where angels team up to make these larger investments.
Yeah, it's shaking things up.
Crowdfunding really opens up opportunities for more people to participate.
Right.
And syndication allows angels to, pool their resources, share the due diligence process.
So it's like strength in number.
Exactly. And the book also points out that angel investing is no longer limited by geography. We're seeing a global reach, connecting investors with startups from all over the world.
So exciting. So many possibilities.
It's a really exciting time to be involved.
Okay, so let's shift gears a little bit and talk about you.
Okay.
The potential angel investor out there.
Yeah.
The book offers some great advice on preparing for this journey.
It does.
So let's hear it. What's step one?
Step one, I would say, is Start by assessing your finances. Angel investing does carry risks.
Right.
So make sure you have some disposable income
Yeah.
that you can afford to lose
Yeah.
without impacting, your financial stability or your family.
That's a crucial point.
It is.
Yeah.
It's like any investment. You never risk more than you can afford to lose.
Right.
And next, get clear on your goals.
Okay.
Why are you doing this?
Mm-hmm.
Are you primarily seeking financial returns?
Mm-hmm.
Or are you also motivated by, the mentorship aspect shaping the future?
Right.
Both are valid, but knowing your why will guide your decisions.
So figure out what's driving you, what gets you excited about this world.
Exactly. And then identify your areas of expertise.
Okay.
This helps you focus your investments
Mm-hmm.
and potentially add value to the startups that you choose.
So it's about finding that sweet spot where your passion and knowledge align
Exactly.
with the startup's potential.
Yes, leverage what you already know.
Right.
Whether it's technology, marketing, finance, whatever your strong suit is.
Makes sense. And don't underestimate the power of networking.
Networking is huge.
Right.
Attend startup pitch events.
Mm-hmm.
Join angel investor groups. Connect with other investors. Building relationships is key in this world.
Absolutely. It's all about learning from others who have been there and done that.
Absolutely.
And the book also emphasizes the importance of continuous education.
Yes.
Right?
There are tons of resources out there, books, workshops, online courses,
Right.
to help you really deepen your understanding of this world.
Think of it as investing in your own knowledge, which will ultimately pay dividends
Exactly.
in the long run.
Yes.
And finally, start small.
Yeah.
Right? Don't go all in on your first deal.
Right.
Make smaller investments as you learn the ropes.
Yes.
Build your confidence.
Refine your strategy.
Right.
It's like dipping your toes in the water before taking the plunge.
That's great advice. It's about getting comfortable with the process and finding your footing in the angel investing world.
Exactly.
Now, before we move on to the nitty-gritty of evaluating startups and all that, let's touch on the legal and ethical side of things.
Sure. That's crucial.
Right.
The book Be the Angel Investor actually dedicates an entire chapter to this.
Yeah.
You need to understand accredited investor requirements, your tax obligations, securities laws. It can seem daunting,
Right.
but it's manageable
Yeah.
with the right guidance.
So having a good attorney or tax professional
Absolutely.
who specializes in startups is a must-have.
Yes, they can be invaluable partners on this journey.
Right. They can help you navigate the legal and financial complexities.
Yes.
And ensure you're staying on the right side of the law.
Exactly.
Okay, so now that we've laid the groundwork, let's dive into the heart of angel investing.
Let's do it.
What does it really take to think like an angel investor?
Yeah.
What are the key factors to consider when you're evaluating a startup's potential?
Okay.
Let's get into the mind of an angel investor.
All right. Well, it's about blending, visionary thinking with calculated risk-taking and a genuine desire to, nurture innovation. You're not just handing over a check.
Right.
You're backing someone's dream.
Yeah. It's like being a modern-day patron of the arts, but for the world of startups.
Exactly.
The book actually calls it the Angel Investor's Manifesto.
I like that.
And it really highlights that balance of optimism and pragmatism.
Yeah. You need to be able to see the potential while also, assessing the risks and challenges. And one of those critical skills in all of this is, evaluating a startup's potential.
Right.
Yeah.
How do you separate the game changers from those that might not make it?
That is the million-dollar question.
It sounds like a mix of research and gut feeling and experience.
It is. It's a lot of intuition,
A
not a pattern recognition.
Yeah. What are some key factors that angel investors tend to focus on when they're evaluating a startup?
Yeah, the book breaks it down into several key areas.
Okay.
First and foremost is the team.
Okay.
Are they passionate, knowledgeable, coachable, and resilient? Do they have the experience to execute their vision?
It's like assembling a team for a high-stakes mission.
It is.
They need that drive and the expertise, but also the ability to adapt and overcome challenges because startups rarely have smooth sailing.
Rarely it's a roller coaster.
Right.
Absolutely. A strong team is essential. Next, consider the market opportunity.
Okay.
Is the startup addressing a real problem? A pain point for a large enough market?
Right.
Is that market growing?
You don't want to invest in a brilliant solution to a problem that nobody has.
Exactly. Innovation needs to meet a genuine need.
Right.
in a market with potential.
Yes, and that leads to another critical factor, which is product market fit.
Yes.
Does the product or service actually solve the problem that it claims to address?
Mm-hmm.
Is there early customer feedback validating the concept?
Exactly. It's about, having proof that people actually want what they're offering, not just a great idea on paper.
Right. Then there's the business model.
Yes. How will the startup make money? Is the model viable and scalable
Right.
for growth?
It's got to be sustainable. You don't want to invest in a company that's destined to burn through cash
Exactly.
without a clear path to profitability.
Yeah, absolutely. The book also highlights the importance of competitive advantage.
Okay.
What sets this startup apart from the crowd?
Right.
Unique technology, a groundbreaking approach, strategic partnerships.
It's that special something, that secret sauce that gives them an edge
Exactly.
in a crowded market.
And finally, look at traction and milestones. What has the startup achieved so far?
Okay.
Early customers, revenue partnerships, these demonstrate their ability to execute.
So it's about seeing those early signs of success.
Right.
That they're moving in the right direction.
Exactly. Now, we've talked about the potential.
Right.
But the book is also realistic about the risks involved in angel investing.
Of course.
But it emphasizes that thorough due diligence can help mitigate those risks.
Okay, so due diligence is where the detective work comes in.
Okay.
Going beyond the pitch, verifying claims, uncovering any potential red flags,
Right.
really gathering the information you need to make a well-informed decision.
It's about separating fact from fiction. The book outlines a very comprehensive due diligence process,
Okay.
starting with vetting the team, checking backgrounds, experience references.
Like a background check.
It is. It's a background check, making sure that, they are who they say they are.
Trust but verify.
Right. Next is reviewing the legal side, incorporation, documents, contracts, agreements, making sure everything's legitimate,
Right.
And if they claim proprietary technology or patents, those need verification.
Yeah. You don't want to invest in a company that's built on shaky legal ground.
Right.
Or is infringing on intellectual property.
Of course not. Then comes the financial health of the company. Reviewing financial statements, cash flow projections, any existing debts.
It's like checking their vital signs.
It is making sure the company is in good shape. But it's not just about the numbers themselves.
Right.
It's also about understanding the story behind them.
Yeah.
The book stresses the importance of independent market analysis. You need to validate the startup's claims about market-sized trends, competitors.
Do your own research. Don't just take their word for it.
Exactly. And one of the most valuable aspects of due diligence is customer validation.
Okay.
Talk to early customers or beta testers.
Right.
Get their feedback on the product or service. Are they satisfied? Do they see the value?
Yeah, it's about getting firsthand reviews from the people who matter most, the users.
Exactly. And, in technical fields, bringing in an expert for a technical review of their product or platform can be really helpful.
Absolutely. You want to be confident that their technology is sound and competitive.
Right. And don't forget about regulatory compliance. Ensure they have the necessary licenses, permits, and they meet industry regulations.
Make sure they're playing by the rules.
Yes, to avoid headaches down the road.
But the book makes a key point. Due diligence isn't about finding reasons to say no.
Exactly.
Right.
It's about gathering the right information to make an informed decision. It's about separating the promising startups from those that might not be a good fit for you.
Yeah.
Ultimately, it's about deciding if this is a company you believe in and want to support.
So it's a process of discovery, not just an investigation.
Exactly.
Okay, let's say you've done your due diligence, you're convinced this startup is a winner. Now it's time to talk terms, right? What comes next in this angel investing journey?
Okay, so we've done our detective work. We believe in the company. Now what happens?
Right now, it's time to negotiate the terms of the investment.
Okay.
The book calls this structuring your investment like a pro.
Okay.
And it dives into some key things to consider.
Like where do you even begin?
Well, one of the first things is valuation.
Okay.
How much is the company worth? This will determine your ownership percentage.
Right.
And potential return on your investment.
Right. Finding that sweet spot that kind of reflects both the company's current stage and its potential.
Exactly.
The book also mentioned different investment vehicles.
It does? Right. Like what are those?
Yeah. So there's common stock,
Okay.
the simplest form of equity, but with limited investor protection.
Okay.
Then there's preferred stock, which comes with more investor rights,
Mm-hmm.
but also adds complexity.
Okay. And I remember reading about convertible notes.
Yeah.
Which is debt that converts to equity later on.
Right.
The book also mentions safes.
Yeah.
Simple agreements for future equity.
There are a lot of options.
Lots of options.
But the right choice really depends on the specifics of the deal and your own investment goals.
Right.
Beyond the type of investment, though, you'll also negotiate things like ownership percentage,
Okay.
pro rata rights, and board involvement.
Hold on back. Pro rata rights. What are those?
Pro rata rights give you the option to invest in future funding rounds
Okay.
to maintain your ownership as the company grows.
Right. You don't want your stake to shrink every time they raise more capital.
Exactly. And board involvement, that's about having a say in major decisions.
Okay, so you can have like a formal seat on the board?
You can have a formal seat. You can take a more passive advisory role. Really depends on your preference and your expertise.
Got it.
And then there's liquidation preference, which determines who gets paid first
Okay.
if the company is acquired or goes public.
So that kind of protects your investment if things don't go as planned.
Right. Then there's anti-dilution protection, safeguarding your ownership if the company raises money at a lower valuation in the future.
Okay.
And it's important to have vesting schedules for the founder's equity, meaning they earn their shares over time, typically 3-4 years.
So it's kind of like an incentive program, keeping everyone focused on the long-term success of the company.
Exactly. Now, the book stresses that negotiation should be collaborative, not combative.
Right.
You're building a partnership here. And it's in everyone's best interest to create a win-win.
Right. It's about finding terms that are fair and equitable for all involved.
Right.
Laying the foundation for a strong, positive relationship.
Exactly.
So once the terms are set, what's the next step?
Then you formalize everything.
Okay.
That involves drafting a term sheet,
Okay.
which outlines all the key terms. Then you have attorneys review the legal documents,
Right.
ensuring that you know everything is in order and your interests are protected.
Always good to have a legal eagle double-checking the fine print.
Absolutely. And before finalizing the deal, confirm all the due diligence items,
Right.
tie up any loose ends, get any remaining questions answered. You might also need board approval for the investment,
Okay.
especially if it's a significant amount.
Lots of checks and balances along the way.
Yes.
Then what?
Then its official funds are transferred,
Okay.
and you should receive confirmation of your ownership, like stock certificates or investment agreements.
It's like getting the keys to your new piece of the startup pie.
Exactly.
Yeah.
But the book makes it clear that closing the deal is just the beginning of the journey.
Right. So it's more than just being a check writer.
Yes, it is.
You become a mentor, a guide, a connector.
Right.
You're really invested in these companies that you believe in.
Exactly. The book outlines several ways that angel investors can add value.
Okay.
One is regular check-ins with the founders to stay updated on their progress challenges, needs. You're a sounding board,
Right.
offering guidance based on your experience.
Being that supportive presence who's been there, done that.
Right. And you could offer strategic guidance on things like product development, market, entry, fundraising, team building.
Right.
All those crucial areas where your expertise can be invaluable.
Sharing your wisdom and insights to help the company thrive.
Exactly. And leveraging your network is huge.
Right.
Introduce the founders to potential customers, partners, investors, mentors. Those connections open doors.
Yeah. You're like a bridge between the startup world and your broader network.
Exactly.
Helping them build those relationships.
Yes, and if they're hiring, you can help them identify and recruit top talent. And sometimes the most valuable thing you can offer is simply support and encouragement.
Right. Being that cheerleader in their corner.
Yeah.
Especially when things get tough.
Startups are a roller coaster.
They are.
And as they grow, you can also help them prepare for future funding rounds, offering advice on pitching investor relations valuations.
Guiding them through that complex world of raising capital.
Exactly. But the book emphasizes, finding the right balance.
Right.
Support without micromanaging.
Right.
Let the founders do their job while being available as a resource. And a sounding board. Trust and respect are crucial.
So it's a true partnership working together toward a common goal.
Exactly.
Well, we've covered a lot of ground today, from defining angel investing to the nitty-gritty of due diligence, negotiation, ongoing involvement. Is there anything else from the book that really stood out to you?
The book does a fantastic job of highlighting both the excitement and the realities of angel investing. It's not a get-rich-quick scheme,
Right.
but it offers a unique opportunity to support innovation,
Yeah.
potentially earn significant returns, and be a part of something groundbreaking.
It's about embracing the unknown, the challenges, having the courage to back those bold ideas that could change the world.
It really is.
One thing that really struck me was the emphasis on the human element.
Oh, absolutely. That's what resonates most with me, too.
Right.
It's about the people, the partnerships, the mentorship you're investing in, passionate entrepreneurs in their dreams.
It's about more than just financial gains. It's about contributing to a world where innovation thrives.
Yes.
Where the next generation of game changers get the support they need to succeed.
Exactly as Kevin Johnson writes. It's about investing not just in startups, but in your own growth as a savvy investor and a force for positive change.
So as you consider taking the leap into the world of angel investing, think about what truly motivates you. What are you passionate about? What kind of impact do you want to make?
Because those answers will guide your choices and shape your journey in this exciting world.
And who knows, you might just find yourself playing a part in the next big thing that changes the world. Thanks for diving deep